If you are 65 or older and living in Ontario or Quebec, I need you to stop what you are doing right now and pay very close attention to the next few minutes of this video, because there is something happening with your government benefits in 2026 that thousands of Canadian seniors do not fully understand, and it could be costing them hundreds, possibly even thousands of dollars every single year. Here is the question that is on the minds of so many seniors right now. Does receiving the Guaranteed Income Supplement, the GIS, actually reduce or even replace your Canada Pension Plan, your CPP? And more importantly, is there a special formula that people over 65 need to know about before they make any decisions about when and how to collect their benefits? The short answer is yes, there absolutely is. And if nobody has walked you through this clearly, then you are in exactly the right place at exactly the right time. Stay with me, because by the end of this video, you will know exactly how GIS, CPP, and OAS interact for seniors 65 and over, and what you need to do right now to make sure you are not leaving money on the table. Welcome to MR.JACK, the channel dedicated to keeping Canadian seniors fully informed, fully prepared, and financially protected. I am so glad you are here today, because this is one of the most important topics we have covered in a very long time. Today we are diving deep into the 2026 updates for CPP, OAS, and GIS, and we are going to break down exactly how these three programs work together once you turn 65. Whether you are in Ontario, Quebec, or anywhere else in Canada, the information in this video applies to you. We are going to look at the latest payment amounts, the eligibility rules, the changes coming in 2026, and most importantly, we are going to answer the big question head-on: can GIS replace CPP? And what is the age 65 plus formula that every senior absolutely must understand? This is not complicated government language. This is clear, honest, practical information delivered the way it should be. So let us get started. Before we get into the 2026 updates, let us make sure we are all on the same page about what these three programs actually are. Because to understand how they interact, you first need to understand what each one does on its own. The Canada Pension Plan, or CPP, is a monthly payment that you receive based on how much you contributed to the plan during your working years. If you worked in Canada and paid into CPP through your paychecks, you earned CPP. The more you contributed and the longer you contributed, the higher your monthly CPP payment will be. You can start collecting CPP as early as age 60, but if you wait until 65 or even 70, your monthly amount increases significantly. That is an important detail we will come back to. The Old Age Security Pension, or OAS, is different. OAS is not based on your work history. It is based on how long you have lived in Canada as a permanent resident or citizen after the age of 18. Most seniors who have lived in Canada for 40 years or more receive the full OAS pension. You become eligible for OAS at age 65, though you can also choose to delay it to receive a higher amount. Now, the Guaranteed Income Supplement, the GIS, is the one that often confuses people the most, and that confusion is completely understandable. GIS is a non-taxable monthly payment added on top of your OAS pension. But here's the key. GIS is designed specifically for lower-income seniors. It is a needs-based benefit. If your annual income is below a certain threshold, you qualify for GIS. The less income you have, the higher your GIS payment will be. And here's where things get interesting, and where a lot of seniors get tripped up. Because CPP is considered income when the government calculates your GIS eligibility. That means, in a very real sense, your CPP payments can reduce the amount of GIS you receive. It does not replace GIS entirely in most cases, but it does affect how much GIS you get. Now let us talk about the formula. This is the core of today's video, and I want you to really absorb this section carefully. When you turn 65, the Canadian government assesses your income from the previous year to determine your GIS payment amount. This is done automatically through your tax return. So if you have not been filing your taxes, that is the first thing you need to correct. File your taxes every year, even if you have little or no income, because that is how the government confirms your eligibility for GIS. Here's how the formula works in practical terms. Your GIS payment is reduced by 50 cents for every $1 of income you have beyond your OAS pension. So if your only income source is OAS, you could receive the maximum GIS. But as your income increases, whether from CPP, a workplace pension, RRSP withdrawals, rental income, or any other source, your GIS amount decreases accordingly. Let us look at a realistic example. Suppose a senior in Ontario is 65 years old and receives the full OAS pension, which in 2026 is approximately $1,000 per month. If this person has no other income, they could qualify for close to the full maximum GIS, which is currently around $1,065 per month for a single person. That brings their total monthly income to over $2,000 just from these two programs alone. Now, if that same senior also receives a CPP payment of, say, $700 per month, which is roughly the average CPP payment in Canada, that CPP income reduces their GIS by about $350 per month, which is 50 cents for every CPP dollar. So their GIS drops from around $1,065 down to approximately $715 per month. When you add it all up, the total monthly income with CPP, OAS, and reduced GIS comes to around $2,415. Compare that to the scenario without CPP, where total income was just over $2,000. The person receiving CPP still ends up with more money overall, but the difference is smaller than many people expect because the GIS decreases as CPP increases. This is not a flaw in the system. It is by design. GIS is meant to provide a floor of income security for the lowest income seniors. As other income sources come in, GIS gradually steps back. Understanding this dynamic is the key to making smart decisions about when to take CPP and how to manage your overall retirement income. Now let us talk specifically about what is new in 2026 when it comes to the Canada Pension Plan. In 2026, CPP continues to reflect the enhancements that have been phased in over recent years under the federal government's CPP Enhancement Plan. This plan, which began in 2019, has been gradually increasing both the contribution rates and the eventual benefit amounts for working Canadians. By 2026, workers who have been contributing to the enhanced CPP for several years are beginning to see those higher contributions reflected in their projected benefit amounts. The maximum CPP retirement pension for someone who starts collecting at age 65 in 2026 has increased. For those who contributed at the maximum level throughout their working lives, the monthly CPP amount can now be as high as approximately $1,364 per month. However, it is very important to understand that this is the maximum. Most Canadians receive significantly less than this. The average CPP payment is closer to $700 to $800 per month, depending on the individual's contribution history. There is also a CPP post-retirement benefit that many seniors are not aware of. If you are between the ages of 65 and 70 and you are still working while receiving CPP, you continue to make contributions to the plan and you earn additional benefits through what is called the post-retirement benefit. These additional amounts are added to your monthly CPP going forward. So working part-time after 65 can actually increase your CPP over time. Additionally, the CPP death benefit and survivor's pension have also seen adjustments in 2026, which are important for married seniors and common law partners to be aware of. If your spouse passes away, you may be entitled to a CPP survivor's pension on top of your own CPP retirement benefit, subject to a maximum combined amount. The Old Age Security Pension also received indexing adjustments in 2026. OAS is adjusted quarterly based on the Consumer Price Index to help seniors keep pace with the rising cost of living. These quarterly adjustments are an important protection for seniors on fixed incomes, and in recent years they have been noticeable given the elevated cost of living pressures that many Canadians have faced. For 2026, the full OAS monthly pension for seniors aged 65 to 74 sits at approximately $1,008 per month. For seniors aged 75 and older, the government provides an automatic 10% top-up that was introduced in recent years, bringing the OAS amount for those seniors to approximately $1,109 per month. This is an important distinction. Once you turn 75, your OAS automatically increases by 10%. You do not need to apply for this, it happens automatically, but you do need to make sure your personal information is up to date with Service Canada so that the correct payment reaches you. Now, there is one thing higher income seniors need to know about OAS, and that is the OAS recovery tax, commonly called the OAS clawback. If your individual net income exceeds a certain threshold, which in 2026 is approximately $90,000, your OAS payments begin to be reduced. At a very high income level, the OAS can be clawed back entirely. For most seniors watching this channel, this will not apply, but it is worth knowing about so you can plan accordingly. There is also the option to defer your OAS. If you choose to delay taking OAS past age 65 up until age 70, your monthly OAS increases by 0.6% for every month you delay. That means if you wait until 70, your OAS would be 36% higher than if you had started at 65. This can be a smart strategy for seniors who do not need the money right away and want to maximize their long-term income. The Guaranteed Income Supplement is updated quarterly, just like OAS, and the 2026 amounts reflect the most recent adjustments for inflation. For a single senior receiving OAS, the maximum GIS in 2026 is approximately $1,065 per month. To receive the maximum GIS, your annual income other than OAS must be essentially zero. As soon as you have any other income, CPP, a small pension, investment income, the GIS begins to be reduced at that 50 cents per dollar rate we discussed earlier. For couples, the GIS amounts are calculated per person, but based on combined household income. A couple where both partners receive OAS will have their GIS calculated based on their combined income, which often results in a lower GIS per person compared to a single senior. However, a couple can still receive a meaningful combined GIS benefit if their combined income is below the applicable threshold. The income thresholds for GIS eligibility in 2026 have also been updated. A single senior can have annual income of up to approximately $22,000, not counting OAS, and still receive some amount of GIS. For couples, the combined income threshold is higher. If your income is above these thresholds, you will not qualify for GIS. One thing that is absolutely essential to know, GIS is not automatic. While OAS and CPP are paid based on your contributions or residency history, GIS requires you to apply, or more accurately, to file your income tax return each year. The government uses your most recent tax return to determine your GIS eligibility. If you do not file taxes, you do not get GIS. It really is that simple. Filing your taxes is not just a legal obligation. For low-income seniors, it is the key that unlocks thousands of dollars in annual benefits. Now, I want to speak directly to seniors in Ontario and Quebec, because both provinces have additional programs that work alongside the federal benefits we have been discussing. In Ontario, the Ontario Guaranteed Annual Income System, known as GAINS, provides an additional monthly payment to low-income seniors who already receive both OAS and GIS from the federal government. GAINS is a small but meaningful supplement, and it is designed to ensure that the lowest-income seniors in Ontario receive a combined income that provides a basic level of financial security. Like GIS, GAINS is income tested and adjusted based on your financial situation. For seniors in Ontario, it is also worth knowing about the Ontario Senior Homeowners Property Tax Grant, which provides eligible senior homeowners with up to $500 annually to help offset property tax costs. There are income limits for this grant, so be sure to check your eligibility. In Quebec, the provincial government provides the Solidarity Tax Credit, which is a refundable credit that helps low and middle-income Quebecers, including seniors, with housing and other costs of living. Quebec seniors may also be entitled to the Supplement for Older Workers program if they are transitioning out of employment, though the specifics depend on individual circumstances. Quebec also has its own provincial pension plan, the Quebec Pension Plan, or QPP, which operates similarly to CPP but is administered by Quebec rather than the federal government. If you worked primarily in Quebec during your career, your pension contributions went to the QPP, not CPP. The QPP has its own rate structure and benefit formula, though in 2026 the amounts are broadly comparable to CPP. Everything we have discussed about how CPP interacts with GIS applies equally to the QPP for Quebec seniors. The key message for seniors in both Ontario and Quebec is this: the federal benefits, CPP, OAS, and GIS, are your foundation, but your province may provide additional supports on top of that. Taking full advantage of all available programs requires staying informed, filing your taxes, and checking in with provincial benefit programs as well as the federal ones. One of the most important financial decisions a Canadian senior makes is when to start taking their CPP. And given how CPP affects GIS, this decision deserves very careful thought. If you take CPP early, starting at age 60, your monthly payment is reduced by 0.6% for every month before age 65. That means starting at 60 gives you a permanent reduction of 36% compared to waiting until 65. On the other hand, if you delay CPP past 65 up to age 70, your payment increases by 0.7% for every month you wait after 65. Delaying from 65 to 70 increases your CPP by 42% permanently. Now, here is the interaction with GIS that you absolutely must factor in. If you are a lower income senior who qualifies for GIS, taking a higher CPP payment means your GIS will be reduced. As we discussed, GIS goes down by 50 cents for every dollar of CPP income. This means that for lower income seniors, some of the benefit of a higher CPP is offset by the reduction in GIS. However, and this is very important, it is generally still financially advantageous to have higher CPP income over the long run, even accounting for the GIS reduction. This is because CPP is indexed to inflation and guaranteed for life, while GIS eligibility can change based on your income in any given year. If your income increases for any reason, an inheritance, a one-time RRSP withdrawal, rental income, your GIS could be temporarily reduced or eliminated for the following year. The bottom line is this: there is no single right answer for everyone. The best time to take CPP depends on your health, your other income sources, your life expectancy, and your specific financial situation. What I strongly encourage every senior to do is speak with a financial advisor or visit a Service Canada office to get a personalized assessment before making this decision. This is the single most important action any GIS-eligible senior can take. Your GIS is renewed every year based on your previous year's tax return. If you do not file your taxes by the deadline, typically 30th each year, your GIS could be interrupted or stopped entirely. Even if you have no income to report, you must file. And if you have not filed in previous years, it is never too late to catch up. Back payments of GIS can often be recovered for up to 11 months. If you are already receiving GIS, it is automatically renewed each year when the government processes your tax return. But if there is any gap in your tax filing, or if your marital status has changed, or if you have had a significant change in income, you may need to contact Service Canada directly to ensure your GIS continues without interruption. Do not assume everything is fine. Check your account on My Service Canada regularly. If your income changes significantly from one year to the next, for example, if your spouse passes away, you stop working, or you have a large one-time income event, you should notify Service Canada right away. In cases where your income has dropped, you may be able to request a reassessment based on your current year's estimated income rather than waiting for the previous year's tax assessment. This can put more money in your pocket sooner. Every year, thousands of Canadian seniors are targeted by phone, email, and text scams claiming to be from the government about their CPP, OAS, or GIS benefits. The Government of Canada will never call you and demand immediate payment. Ask for your banking information over the phone or threaten to cut off your benefits if you do not act immediately. If you receive any suspicious contact claiming to be from Service Canada or the CRA, hang up and call the official government number directly. If you have not already set up your online account with the Canada Revenue Agency and Service Canada, I strongly encourage you to do so. Through these accounts, you can check your CPP contribution history, see your estimated benefit amounts, track your GIS status, and update your personal information. Having this access gives you control over your own benefits and helps you catch any errors early. All right, we have covered a lot of ground today, and I want to bring it all together for you with a clear, simple summary. First, GIS does not replace CPP. They are two completely different programs. CPP is a pension you earned through your contributions. GIS is a supplement for lower-income seniors. What is true is that your CPP income is factored into your GIS calculation, and every dollar of CPP reduces your GIS by 50 cents. Understanding this relationship, this formula, is essential to making smart decisions about your retirement income. Second, In 2026, the maximum CPP payment at age 65 is approximately $1,364 per month for maximum contributors. The full OAS is around $1,008 for those aged 65 to 74 and approximately $1,109 for those aged 75 and over. The maximum GIS for a single senior is approximately $1,065 per month. These numbers are adjusted quarterly, so always confirm the latest amounts directly with Service Canada or on the government's official website. Third, if you are in Ontario, look into gains. If you are in Quebec, look into the Solidarity Tax Credit and the QPP. Provincial supplements can add meaningful income on top of your federal benefits, and many eligible seniors are simply not aware of them. Fourth, filing your taxes every single year is non-negotiable. It is the gateway to GIS and to accurate calculation of all your benefits. Do not skip it. Fifth, the decision of when to take CPP is one of the most important financial decisions of your retirement. Consider getting personalized advice before you make it. A visit to Service Canada or a consultation with a trusted financial advisor can make a real difference in the total amount of money you receive over the course of your retirement. Sixth and finally, stay informed. The rules, amounts, and thresholds for CPP, OAS, and GIS change regularly. Following channels like MR.JACK means you will always have the latest information delivered clearly and honestly without confusing government language. If you found this video helpful, and I genuinely hope you did, please take a moment right now to hit that subscribe button below. Every time you subscribe, you are joining a growing community of Canadian seniors who are committed to understanding their benefits, protecting their income, and living with confidence and dignity in retirement. Hit the like button if this video answered questions you have had for a while. Leave a comment below. I read every single one, and let me know what topics you would like us to cover next. Whether it is survivor benefits, the best age to take OAS, how RRSP withdrawals affect GIS, or anything else related to your retirement income, your questions shape our content. And if you know another senior, like a family member, a neighbor, a friend, who could benefit from understanding how GIS and CPP work together, please share this video with them. Sometimes one video at the right moment can change someone's financial situation for the better. Thank you so much for being here today. This is Mr. Jack, and I will see you in the next video. Take care of yourselves and take care of each other.